Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report. And if we read the synopsis on top, the week begins with the Aussie and Kiwi dollars testing resistance. Breaks above resistance could lead to large rallies, to 75 on the Aussie and 65 on the Kiwi, respectively. So let's scroll down, see what he has to say about the Euro. On Friday, I wrote that the upper end of the triangle line is in the 129 to 129.50 zone today and Monday, and is resistance in the event of an advance. Let me also scroll down to the dollar-yen, as that's what we have been focusing on for the most part in my reports. The larger dollar-yen trend is down, so strength should be sold. Evidence that favors a new low is the momentum extreme, RSI, at 90.86. As I've mentioned many times before, price extremes, highs and lows, rarely correlate with momentum extremes. Instead, price extremes occur with momentum divergence. Support begins at 96. So let's go ahead and pull up the charts. The first chart that I want to start with is the euro dollar. Not much has changed since yesterday. If you recall, hopefully you were able to get in on the inverse head and shoulder pattern that I described on Thursday evening. Here's a better view of that. I mentioned during yesterday's report, when prices were around here at this level, just below that 129 figure, that we might look to take the trade off the table as the overall trend is down, and that is likely to resume soon. So nothing really now in terms of any setups that I can see on the pair. What I would suggest is just keep an eye on Jamie's reports each and every day for further developments. Again, the trend is down, so we would look for short trades. Ideally, I'd look for a move up to this upper resistance line. That's the only good setup I could see at this point, but of course things can change, so certainly keep an eye on Jamie's reports. Next chart is the dollar-yen, and as I redrew the resistance line for yesterday's report, and we can see that it did act as resistance as prices got within just a few pips of the resistance line and then did reverse. So hopefully you were able to get in to a trade off this trade idea, off this resistance line. Again, the overall trend is down, so if you were able to get an entry near that resistance line, I would continue holding that trade, and as Jamie mentioned, the next level of support is that 96 area, and I would look to exit at least a portion of the position near that price level. The next chart is the euro pound, and here we've actually, on yesterday's candle, we had a new high. So this is what I'm doing personally. I'm abandoning this trade idea. For the last few reports, I was mentioning to maintain a slight bearish bias against the 81.95 high, which is this candlestick right here. I can go ahead and change the style so you can see that a little better. I was maintaining a slight bearish bias against this price level, the horizontal line there, but as I mentioned, I believe when I first brought this trading idea to the table, any move above that 81.95 high, we should abandon the trade idea, and as that did occur yesterday by just a few pips, I believe by only 10 or 12 pips, but I would avoid this trade. I feel like there could be a breakout to the upside here, not something I want to play as there's no clear technical sign. But it is something we can look for, keep on the radar screen. If there is a breakout, we would wait for a daily candle to close above that 81.95 area, or actually I would say now even use that new high of 82.08 and wait for that to occur before any trades present themselves in this pair. The last chart is the Kiwi, and yesterday I did have the shorter term support line drawn. Let me go ahead and draw that line one more time, and we can see that prices did in fact just blow right through that line, and nothing wrong with that. That's going to happen from time to time. There was just a slight brief rally on the first test of the line, but we could see prices now are below it. As Jamie was mentioning, there could be a move to a new low. Jamie was mentioning a move below 57.42. What I would look for moving forward, as I was mentioning in the previous few reports, which incidentally are located directly above this report if you're viewing this in the Daily FX forum, I would look for a move down to this 50% fib level, maybe take out out this low over here by just a few pips and then look for a reversal. So that's what I would look for. Maybe if you have the capability, set an alert for that 57.45 area, maybe even 57.50, and I would take an interest in the pair on the long side down at that price level. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.